Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Thursday, July 1st. Great to have you here with us for another day and another month. Hard to believe we're into July already. Thanks for joining us here. I'm your host, Jesse Allen. You can find us online by going to markettalkag.com. That's our home on the web, markettalkag.com. Find us on our Facebook, Twitter, Instagram, all there, our social media. Follow us on all of our streaming sources or whatever you prefer. Give us a like, a review, everything. It's all a one-stop shop online at markettalkag.com. Well, an interesting day here today in the market trade after an explosive Wednesday. Let's talk about it. Bring in our friend John Heinberg with Total Farm Marketing. And John, good afternoon to you, sir. And looking at this market trade today, it just seemed like we ran out of gas and everyone decided to take some profit here before the long holiday weekend because we settled well off session highs today, John.
Yeah, we did. It was kind of disappointing, to see that strong follow through after yesterday's surprises on that USDA acreage and stocks report. And, we had some two-sided trade, obviously kind of finishing in the middle of the pack, at least in beans today, a little bit on the negative side. A lot of profit taking probably kicked in today. Obviously, we got a 3-day weekend with the 4th of July holiday coming up. We're off on Monday in terms of markets are closed, even no trade on Monday night. So we really won't see things get rolling again until Tuesday morning. So maybe some traders after a pretty good run yesterday, and we saw a heck of a move off those lows yesterday, took profits today and might just start packing it in already early for the 4th of July weekend. So I expect tomorrow to be pretty quiet and choppy overall, just with not a lot of movement. At least there's not a lot of volume being traded. Sometimes those can actually give you some pretty good movement days, so we'll have to watch. But this really looked like they felt like some money moved to the sidelines in the grain markets after that strong move higher yesterday.
Well, let's talk about that strong move higher yesterday and your take on it. I mean, getting those numbers in, quarter bean acreage went up, but it was below the pre-report average estimate. And, you look at stocks and everything else, stocks were down. I mean, just a lot of surprises in that report yesterday that frankly, I was fairly surprised we came in where we did. I thought acreage would at least be right around that pre-report average level or maybe even a little higher on the corn side.
Yeah, those are good numbers. I mean, obviously well below expectations on the acreage side for corn. Maybe we're taking into account how much land we have lost here over the last handful of years in terms of urban sprawl and some development, things of that nature. I can just drive around the countryside here, being outside the Milwaukee suburbs, and just seeing how much we've seen development over the 9 years I've lived here. So, maybe that's starting with the issue that just the principal acres aren't out there, and back to 317 total crop acres, 317 million, that is, excuse me. That might be a number that is, a reflection of truly what's available to us as we compete with other grains and other ag commodities that want to be in this market as well. So with that, obviously a friendly number, really got that, limit up reaction yesterday as it kind of really beat what the market was expecting. The other thing, as I talked about it with my producers in terms of just the broadcast and the phone call I did this morning, it's also where are those acres at? And the thing is, it's up in that northwestern corner of the Corn Belt or up in the northern plains with the biggest jump in acres, and North Dakota, South Dakota, Minnesota, which we know have their weather issues. Now, with that being said, we're still looking at the USDA pegged it yesterday, harvested acreage at 84.5 million. Currently, the yield is 179.5. With the weather improvement in some regions, despite the dryness in that area of the grain belt, is it enough to make them move that yield around? And if that's the case, we'll see what this market wants to do accordingly. Next week we got USDA supply demand. We'll put those new numbers in. We'll see if there's any changes on yield. I'm actually not expecting any, so hopefully I'm pleasantly surprised. And if that's the case, we might run ourselves to some good resistance over top here December, about 620. And maybe we get ping pong and sideways back to a range type trade here in the next few weeks.
Well, you bring up the corn and the bean acres, John, and some of those areas, and I got the maps from the USDA. I'll pull them up for us here on the video. And what's interesting to me, looking at the corn first, is you see a drop in Iowa, Nebraska, Missouri, while you see gains in the Dakotas, in Minnesota. Just as you mentioned, those dry areas of the northwestern Corn Belt and the northern plains is where we saw acreage increase, and that's definitely something. And I think we've started to see that over the last few years, is that we've seen more of these acres shift more to the north and west, which of course this year is setting up to be right in that danger zone, so to speak, for the hot and dry weather, John.
Very much so. And, and actually the chart you're showing there is the estimates over that March number. And you go look at a year over year estimate change. And that's even more significant because realistically, at least according to what the USDA put out there yesterday, the entire Corn Belt, basically Illinois, Iowa, Nebraska, Kansas, and was actually lower in acreage on corn from last year. Indiana was steady. But then we saw big jumps in North Dakota, South Dakota, Minnesota. It was actually kind of just eye-catching as the only 3 blue states in terms of corn acreage next year, or year-over-year comparison, were those 3 states. That's kind of been the trend if you look at corn production and how it's moved north and west over the last handful of decades here. That does put it in the crosshairs for some issues. So, that's still going to be a big part of this going forward. We're going to continue to trade the weather forecast. We're going to be watching those models. Like I said, we kind of got to get through the supply-demand report next week and see what the USDA puts the balance sheet at. It may stay a little bit artificially heavy if we think the yield is light. We'll have to watch that at least at this time frame. So again, to me, it feels like the market, until we get some changes on that yield or we get something to make it really break out, maybe something on the demand side. Does China step in and pick up some buying that kind of kicked in last year around this July window? That could help push us through as the demand kicks back in. But maybe we just get ourselves a little bit sideways here if we can't get through that 620 area, which is that trend line over top those recent highs.
Well, of course, watching the weather, the 30-day forecast came out from USDA today. Hot and dry throughout those northwestern and northern plains. So that's definitely something we're watching. And Iowa's kind of right in the middle. That's the pivot point. And we've been talking about this. You basically draw a line from the northeast corner to the southwest corner, and that's kind of the line right now. I talked to a producer today in north central northwest Iowa, and we were talking, and I said, how much have you marketed for new crop? And he said he's only 5% corn, 10% beans. He says there's just too much unknown for him, and he says he can't afford a margin call if this thing flips over. I mean, what are you hearing from folks, in that northwestern belt and some of the people you work with? I mean, how much marketing really is safe? Is it that 5 to 10% window, or can they afford a little more with the unknowns out there?
I would say with the volatility and understanding where your crop is going to be key, and not too much risk out there, because actually you might put yourself at a bigger risk, again, getting that market plan put together and you got too many bushels. And let's say this crop isn't there, and next thing you know, we are talking $7 plus. That's a pretty hefty price tag to try to get out of some of those positions. So in this window, again, I've talked to producers. I hear the same types of things in that area. They just don't want to stick their neck out per se and get those extra bushels out there because they just don't know. And with the longer range forecast, again, staying still very, very warm and dry, it seems like it's going to hold that all the way through the month of July, which should still be supportive of this market. Still some good value, safety valve puts. At least make sure you got something underneath this thing if you want to protect yourself if you're in those areas, because that gives you the market flexibility, but still putting a floor underneath. I just saw today even $5 puts. I know that's 80, 90 cents out of the money. That's still a good number compared to where we could be if things were to roll over. They're 18 cents. That's not a lot of risk for an insurance policy underneath this market. So that'd be my recommendation to producers. If you're not going to make those sales because you're not sure where you're going to be in terms of the crop size, at least make sure you secure the floors. Because obviously sometimes, even though that area may be difficult, we might have a bumper crop in the other half of the Corn Belt, and it might outlast that or outweigh those issues. And this market could look heavier as we get into the fall. Making sure you got some type of floor is still going to be a key.
And I was going to follow that up. The Eastern Corn Belt, that's a totally different story when you're marketing. And, in some cases, maybe some folks saw too much rain from the recent rain events and flooding, but a lot of folks have caught timely rains in that Eastern Corn Belt, parts of Illinois, Indiana, Ohio, you name it, and they are sitting on a totally different situation with their corn and bean crop right now.
Yeah, they are. And I actually fielded the questions there of producers wanting to push a little more corn out before the report yesterday just to kind of secure the floor a little. Now we're talking what targets we're trying to put in as they feel a little bit more comfortable. Again, in some regions, some guys got a little too much rain. So that was a big factor in that regard. So we'll have to see how this all kind of shakes out. It is still July 1st today. We're now getting into the key points of the summer as we're getting closer to pollination. We'll have to watch how that handles the temperatures. We'll have to watch if there's any replant issues. Crop ratings next week will be kind of really a mixed bag in my mind. I think we'll probably see things be improved in one area and obviously weaker in the other. And it just depends how this market wants to handle that. That's going to be the same story in beans as well. Beans got a little bit more time that maybe it'll keep them going. But, those numbers were really, really friendly for me for beans yesterday. Obviously, to me, it was almost a bit of a game changer. We needed 90 million to get to the levels that we thought could get us a little bit comfortable and carry out, and we wound up getting basically nothing in terms of additional acres. Throw that supply in there, throw those acres again being in the north and the west, being some of those new acres that we brought in, but that really makes that bean market look aggressively tight.
John, on the wheat side, spring wheat ran out of buyers, it seemed, today. And, we know the issues with that crop. I mean, the USDA numbers, I think it was only 3.5% abandonment when a lot of people are thinking that number could be upwards of 10 to 15%. That crop is just in dire straits. It's burnt up. But surprisingly, spring wheat turned lower here today. What do you make of that move and its impact on the hard red wheat and the Chicago wheat market?
Yeah, it was a little bit of a surprising move, but again, looking at some profit taking in a market that doesn't have a lot of players, so it moves around extremely quickly. And just kind of has a waterfall effect one way or another. In this regard, it happened to be down today. If you still look at where we are over the last handful of days, even though you're down 20 cents on that September contract today, we're still working the top half of the range from yesterday's trade. And all we need is another forecast or some more ratings to slide, and we'll see that market push higher. To me, it feels like it wants to work higher at this time frame, but obviously the global wheat picture is still fairly heavy. But I'm looking at targeting that price possibly moving up, and maybe we go back to those 2013 highs and challenge that $10 window. We'll have to see. Again, obviously USDA was a little more quiet in terms of abandonment yesterday. You're hearing higher talk of that in terms of what's on the internet and social media. Obviously, just saw a clip right before I got on the line here with you guys talking about where the yield might be. It might be its worst in basically a decade and a half. So we'll have to see how that all plays out. Again, there's not a whole lot of relief in sight in that region, and that crop's at the stage where it's pretty well, falling apart. And I think those abandonment numbers are obviously going to go higher.
We didn't even touch on South America. Brazil's had frost issues down there, and that's another thing that we're going to be watching on the corn side, on the global scale too. Just seeing where that safrinha corn crop ends up, but definitely trouble down there. I want to give us time to get over to livestock here today, John. On the cattle side, with the heat, we've been dealing with issues with cattle out there in the West, with some culling and things of that nature, and just that's one issue in itself. But looking at this market, we did all right today after the grains fell lower, cattle turned their way higher. Any thoughts on this overall feel of this cattle market here as we get into the month of July?
Well, shorter term, I'm still a little cautious of the market. Like I said, nice pop today. Cash trade looks like it was staying relatively steady. It depends on the region. I got some areas that were a tick up from last week. I got some areas that were a little bit lower than last week. So overall, we still got some decent support in the cash market. Really been disappointed in what's happening on the retail side. We've lost now over $50 since the June 2nd highs in terms of choice carcasses. So even though with that being said, we're still at multi-year highs and there's still good value that can support this cash market at these levels. So we'll have to watch how that shakes out. I'm staying a little cautious here in the short term. Not sure what's going to happen with the grain market. How does that carry over into the feeder market? But I did like the look of the long-term charts. If you pull those up on monthly charts that closed out yesterday for June, we saw some good, strong closes that point to the upside on both lives and feeders. Now, we got a wide range last month, so we know the possibility of going back down and retesting last month's lows is not out of the question. But at the same time, I still love the long-term picture kind of as we work through these cattle that we got a little bit piled up right now still, again, in these front-end cattle markets. But third and fourth quarter, especially if grain prices get rolling, we saw the weak placements on last week's cattle on feed numbers. that just gives me signals that this market's got some strength ahead of it. I know 160, 130 plus looks like it's a little bit on the costly side over the last handful of years, but that may be a bottoming point for this market to really run out, especially if we continue to see grain prices kick back in and those cattle numbers are going to tighten up overall.
John, on the hog side, we ran into some resistance here today after this market's been trying to find a little support. Any thoughts with hogs here as we work towards the end of the week and the holiday weekend?
Close tomorrow might be pretty key. Really disappointing day today. We were trying to get a little bit of traction. We did get those export numbers this morning. China was a very minimal player. I think that was very disappointing to the market overall. As we've kind of seen them, they made some moves to perk up their hog prices. I think that helped turn us here a couple days back. But at the same time, we're still kind of dealing with the same fundamentals. Like in cattle, retail values are coming down. We're questioning the long-term demand. We'll see what that kind of does. Obviously, you got a market with a lot of length in it, so we saw some paring back on that as well. Disappointing close today. Tomorrow could be very interesting. I think we may possibly go back and retest those lows in that front-end contract, so we'll have to watch that. Longer term, again, like cattle, still like the picture there, but it's a market right now that's really trying to find its bottom, and maybe the volatility we've seen here with these quick swings like today's is a sign that the bottoming process is starting to build.
John, any thoughts on the dairy market as well here on this Thursday?
Dairy market, again, has been seeing some pressures. But we did see a little bit of a pop back this last couple of days based on some of the movement. Again, almost like the hog market. It just kind of feels like we got a little bit of squaring up at the end of the month here. I just don't like the production side of things right now. It feels like we could work lower. Hopefully we got a little bit of a bottom in these front ends. But at the same time, I keep looking at $18, high 17s now into next year. This is spot producers. Want to make sure we got something put together, because if we do keep the production high, it's going to keep putting pressure on these prices overall.
And John, always appreciate the time and you joining us here on this Thursday. Any final thoughts for us here as we wrap up the show?
Yeah, big move in that energy market today. You got to keep an eye on what happens with crude oil. The OPEC meeting got moved back to tomorrow. They're expecting to see a bit of a push on production, but at the same time, they're increasing their demand forecasts. We're running at a net deficit right now in terms of demand versus supply, and crude oil pushing the 75 on August today. Maybe we get through that high from back in 2018. That opens the door for $100 crude. That could lift this market in general, because that strength in crude can really help out the commodity sector. So that's one market I got an eye on right now.
John, I know if producers want to reach out and get a little advice, they can give you guys a phone call, give you an email, check out the website, totalfarmmarketing.com. A lot of different ways to connect with you and your team there at Total Farm Marketing, isn't there?
Yeah, I love chat with them anytime. Again, feel free to call the office, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And like you said, feel free to check out the website or even our mobile app for Total Farm Marketing. A lot of information on there, as well as the ability to hook up and reach out to us. And gladly look forward to working with anybody or talking with anybody if they got any questions.
John, have a safe and happy 4th of July weekend. Don't shoot off too many fireworks now.
We got our supply, but I'm looking forward to it. It's going to be a fun weekend.
John, appreciate it, my friend. We'll talk to you next week. Thanks.
Thanks. Have a great week, everybody.
John Heinberg with Total Farm Marketing joining us here today on Market Talk, brought to you by GrowMark FS. Find us online, markettalkag.com. This has been the Thursday, July 1st edition of Market Talk. I'm Jesse Allen. Have a great afternoon.